All right. Well, today we have Jay Rooney.
Roney.
Roney. All right. Today we have Jay Roney here, sharing his wisdom with us. So I appreciate you coming on the podcast, Jay.
Of course.
So you've been in real estate for a really long time.
Since 2008 was
Okay.
my first purchase.
Okay. Yeah. Why don't you tell me how you get, or tell us how you got started in real estate?
Yeah, so I had a business associate through my day job.
Mm-hmm.
I worked in IT for 25 plus years in various sales and sales support roles. And one of my contacts had done a lot of real estate with his father, and we had talked about it. We kind of became friends outside of work, and we had talked about it on and off. And I had said, hey, I'd like to get into that at some point. Well, we did a side project where he owed me some money, and I said, well, I'll tell you what, instead of you paying me the money, let's find a deal that we
Mm-hmm.
can do together. So that's how I ended up buying my first rental property in 2008, which was kind of the heart of the downturn.
Mm-hmm.
And so he and I together bought a property in Redford, single family home. And he kind of just let me run with it with his guidance so that I could learn by doing. And
Was it a fixer upper or a rental or what was it?
it was a foreclosure,
Mm-hmm.
and we bought it as a rental. Well, we'd originally actually bought it. The program or the idea was that we were going to buy it, but the guy we were buying it from also was trying to find end buyers.
Mm-hmm.
So he would find somebody to put into the house, and then I think he had a lending program. He'd lend them the money. He had this whole sort of program put together where he was trying to help people buy homes. Um, well, the first person that was supposed to buy it, we showed up to the closing table, signed all the selling paperwork. He's in another room. He didn't end up signing,
Oh, wow.
so he walked away,
Mm-hmm.
and we
At the
ended up
closing
keeping the
table?
property.
Wow.
Yeah, at the closing
Wow.
table. Yep. So we ended up keeping the property. Decided to make it into a rental, and I still own that property today.
Well, how'd you fund it in the first place?
Um, I got a loan through Chase Bank.
Okay.
Ultimately, I think it was after the whole sale fell through, we needed to redo our funding because I think the original funding was through this guy that had the program.
Mm-hmm.
Um, and once that all fell through, we needed to fund it. So I ended up getting a loan through Chase Bank, and just a traditional investment mortgage.
Okay. Just 20% down.
Yeah,
Okay. Yeah.
yeah,
Nothing
exactly,
special. All right.
exactly. And so that was that money that he owed me covered the downstroke and some of the upfront closing costs and got us
Okay.
into the property. And we traded money so that it ended up 50-50 at the upfront, and then everything from there on out was 50-50. And then he ended up signing that property over to me entirely in 2016. And I actually bought two more properties from him and his dad at that time.
Okay.
Um, and those are owned in my IRA.
Okay. So he owed you some money, but it all worked out and you kept doing business together and
Yeah, no, there's no bad blood. We're still friends
good.
today. I mean, it
Good.
was just he was just looking to pull back a little bit from the rental businesses and wanted to focus on other things. And in fact, when he signed it over to me, I don't think any money changed hands. I think he just signed off on his portion of the LLC, and I just went forward with it from there.
Okay. Yeah. So that was how you got your first deal, which was a rental.
Yep.
Did it need some renovation too, you said, or
It needed a little bit. It wasn't crazy.
okay. Wasn't a big
I
scary
think
project?
after the first couple of tenants, because we had a decent amount of turnover the first few years. I
Mm-hmm.
had a Section 8 tenant in there for a little while, 2 or 3 years, until she decided she needed more of a ranch, and this was a bungalow
Mm-hmm.
because she had a son who was special needs,
Okay.
and she needed something she could get his wheelchair in and out of his bedroom more easily.
Yeah.
We talked about moving a door and all of
Mm-hmm.
that, reconfiguring the layout so that she could stay, but she ended up finding a ranch that she could move into. So after she left, we did a more major superficial renovation. Redid the kitchen, put some ceramic tile down, all new cupboards, that sort of a thing, just to get it a little more freshened up. It was starting to show its
Yeah.
wear at that point. So we did a minor renovation. And then the tenant that moved in right after that has been there ever since.
Oh,
I've
wow.
had that tenant since 2013.
It's funny how they stabilize sometimes and then just are stable for a long time.
I just the one of the other two properties in Redford, um, I just had a tenant move out at the end of June. He was there 14 years.
Wow.
I acquired him with the property.
Mm-hmm. Was the place trashed after 14 years?
No, it looks good. I
Yeah.
mean, wear and tear, but it's kind of the same thing. That's I was just down there the other day
Mm-hmm.
with a contractor trying to figure out, okay, what can I do? Because I think what we're going to do is just sell it and cash out.
Yeah.
Because we bought them in 2016 at a good price. Values have gone up so much. My return on that original investment
Yeah.
is decent
Mm-hmm.
with the current rents. Even if I get a rent increase, it'd be even better. But my return on the actual equity,
Yeah.
the current value,
Yep.
is not very good.
And it's in your IRA, so you sell it. The proceeds go to your IRA,
Correct.
tax free. Right?
Tax deferred,
Tax
depending
deferred.
on the type of IRA you had.
Yeah.
Could be tax free if it's a
Tax
Roth.
deferred.
Mine is
Okay.
not.
Okay. Tax deferred, and
Yeah.
then you can lend that money out or put it into other
Yeah.
investments. Okay.
Yeah, and you know, for people that don't know a lot about self-directed IRAs, you can invest in traditional investments like stocks and bonds
Mhm.
and so on, or because it's self-directed, you can invest in non-traditional assets like real estate or crypto or precious metals,
Yeah.
all that sort of thing. Just can't, nothing collectible.
Yeah. Okay.
Can't go out buy a collector's car with it, unfortunately, or stamps.
So that was your first property. What I guess has been your experience till now? That you started with the one, and now.
Yeah, so we grew the rental properties slowly. Like I said, I acquired two more from him in 2016. Prior to that, though, I started getting into flipping in about 2012,
Mm-hmm.
and between my wife and I, we flipped a half a dozen or so
Okay.
properties during that time period. Mostly, well, everywhere from close to home. We were living in the Howell Heartland area, so we did a few close to home. We did one in Royal Oak, which was too far away. At the end, a lesson learned.
Mm-hmm.
That hour drive back and forth to manage contractors and all of that, it can be difficult. So we did Royal Oak, we did Brighton. So we did some flips. And then when I left my corporate job, I took a different direction for a little while. So I really wasn't doing much real estate for a few years. But those rental properties continued to bring in money, which is good. And they've continued to appreciate, which is good. The big benefit of real estate, one of the big benefits. The downside of the self-directed IRA is you don't get one of the other big benefits of real estate, which is depreciation and tax write-offs and all of that. It's very straight, money in, money out. There's no added benefits. But like I said, if it is a Roth IRA, it's all tax-free retirement income once you ultimately are able to start pulling it out.
Do you know if you flipped an IRA or like with
I've done both.
So
Yep.
do you have to pay those capital gains taxes at the
There are
end?
no capital gains taxes
Okay,
when it's
interesting.
in the IRA. It's all just regular income to the IRA.
Okay, interesting.
Yeah. So I'm doing one right now. Actually, I've got one that I'm getting ready to sell. That's a flip in my IRA.
Okay, that's cool. So you bought some rentals, you did some flips. What else have you done? I know you have a vast experience.
Yeah, I've done also out of my self-directed IRA. I've done some private lending, so I've lent money to other investors to help them fund deals. And then more recently, I've gotten into more private lending with a capital partner. So I'm doing a lot more private lending, focusing primarily on fix and flips. We don't do long-term buy and hold. And then when I needed an additional income stream a few years ago, I was looking around for other things that I could do, and I got exposed to the idea of being a mobile notary. And because it's kind of real estate adjacent, I do a lot of loan closings, purchases, sales, a ton of refinances. So that's kind of a side hustle or income stream that I have that is in the real estate area. it also exposes me to opportunities every once in a while. It exposes me to other investors, other people. So it's really been good, not only as an income stream, but as a source of other leads
Yeah.
and contacts.
So where have you sourced most of your deals, your rentals and your flips? Were you buying those from wholesalers or just off the MLS or working with an agent?
All of the above, as well as an auction or
Okay.
two.
Mm-hmm.
So a couple of the deals that we did back in that early flipping time frame, we bought through some of the online auctions, Hubzu.
Mm-hmm.
I remember specifically, I bought one or two from Hubzu. And that was a fairly smooth, fairly straightforward process. Those are foreclosures typically that are bank owned.
Mm-hmm.
So they've gone through the foreclosure process, gone back to the bank, and now the bank owns it and is trying to market it. And that was one of the ways they were.
So those weren't sight unseen or occupied. Those were
Um, they were not occupied. I think one of them was, technically occupied, but it wasn't.
okay. Yeah.
And we were able to get access to be able to view them. I think the ones on Hubzu, yeah, I think all of those, because they were REO properties,
Yeah.
they were listed. The bank was servicing and doing their property preservation, so
Okay.
we had access.
But they were
they'd
foreclosed.
put a
Yeah.
lockbox on there,
Okay.
and you could go in and take a look. You could do inspections. There's, they wouldn't do any repairs or anything, but they'd handle all of making sure liens were cleared and all of that, so there weren't any issues.
Yeah.
And then I've one of the early properties, one of my favorite rehabs, we got through a fellow agent, because I got my license in 2013,
Okay.
and then my wife got her license like the following year, and once she got hers, I decided to just sort of put mine in a holding company. I didn't really do much with it. We just used her license for everything. But one of the agents in the office had a client that was trying to get rid of their parents' house. It was on a lake
Yeah.
down in Brighton. And so we talked to her, looked at the numbers, worked out a deal that worked for us, and ended up buying that. So, multiple sources. And that's, to me, that's one of the lessons learned, is that you need to, when you're trying to buy properties, and we did some marketing, but we never really got anything off of it
Yeah.
because we weren't diligent about it. But when you're trying to buy properties, networking is huge, whether it's just with, family and friends, or these networking groups, or, talking to other agents. Just Facebook nowadays is a big, there's little pearls, I call them, that pop up every once in a while. Somebody will make a comment in a community group, and if you can jump on it quick enough, I got one actually. One of the most recent flips that I did, I got through a Facebook. Somebody had made a comment about it. She was an agent, actually, similar situation. She was an agent, had a client that was looking to offload a property and didn't want to go through the listing process. It wasn't listing ready. It was full of crap,
Yeah.
and she just wanted to sell it and get out from underneath it. And so we worked out a good price on it and bought it.
So your rentals, I guess I'll ask the same question for rentals and flips. Did you fund them just with conventional loans or hard money or private money, or how have you funded most of your deals, or with your own IRA, I guess?
So I've got 5 rentals. 3 of them. So the 3 we've talked about in Redford, one that was a mortgage through Chase Bank, 2 that we paid cash out of our IRAs. And then my first rental that I bought in the Lansing area, I'm actually buying on land contract. And then the other one, I had sold a flip, and I had a bunch of cash, and the church. You've heard me talk about the church. The church, I ended up just buying cash.
Okay.
And that one I'm running that as a rental now, even though I just have my son in there.
Okay, gotcha.
Well, he's going to school.
Okay, that's a crazy story. Yeah. So, and then your flips, how did you fund those?
I've done a mix. So we've done some in the IRA, and the ones that we were doing early on, most of that was private money. So, and I differentiate kind of private money and hard money as 2 different things. And what I'm involved in now is kind of a hybrid of the 2. It's hybrid. It's private money, but it's hard money lending.
Yeah.
So the private money loans that we did for those early flips were friends, contacts, so on, that were loaning out of their investments or their retirement accounts, whatever, to, and it's not no points, no fees, just kind of a straight,
Yeah.
friend to friend sort of a relationship, mortgage and deed or mortgage and note, securing the property and securing the loan, but not a whole lot in terms of fees, just a real straight interest rate, real simple, usually 10-12%.
Where
Was what we were
so
paying at
where'd you
that time.
find those friends with money? Because that's a question I get asked all the time. Is like,
Yeah,
well, do you know anyone that could lend me
it is
money?
kind of the holy grail, isn't
Yeah,
it?
and I
I
was like,
mean,
well, you probably know people that would lend you money.
right.
So where'd you find those people?
Um, One was actually my original business partner's dad. He had a bunch of money. We were talking, and we had this opportunity coming up in Howell, and he said, "Well, I could fund that for you," and so we did that. The others were kind of friend of a friend. Another investor that I met early on that I did a lot of, he did a lot in terms of helping me with referrals for contractors and a designer
Hmm.
and various items. Um, it was one of his lenders that he had recently sold a property and they were looking to redeploy the capital, but he didn't have any other deals for them at the moment.
Hmm.
So we worked with her to, fund our project.
Yeah.
Um,
So
and
like you
then
said,
some
it's
repeats.
yeah.
So it's a lot of, just kind of networking again and talking to friends and family. I think one thing I've not done much of that I um, believe is a powerful strategy too is just telling everybody
Yeah.
what you do, so that you can have those conversations, and it's you don't ask them for money, but you basically are telling them, well, hey, I help people with money that want to invest in real estate, you know make some money in real estate by getting them into a deal and securing it with real estate and then getting them a good return, and
Yeah.
hopefully doing it again and again.
You're just telling people what you're doing and
Yeah,
kind of putting feelers out there.
right,
Yeah.
right. You're not asking them for money per se. You're just getting them interested, and a lot of times they may come to you and say, "Well, geez, how could I get involved in that?"
Yeah. Yeah. All right. With your experience, is there a horror story you could share? I mean, most people only share the wins.
I mean, one of the lessons that I've learned and I continue to learn is time is money. Um, Especially when you're doing a flip,
Yeah.
you got to get in, get done, get out. I have a really, really bad tendency to procrastinate and drag my feet
Yeah. Me too.
on stuff. And so I've held on to deals a lot longer than I should and eaten into my profits
Hmm.
because of it. The one that I've got going right now is a really bad example because it's a condo.
Hmm.
So not only do I have, the only good news is it's in my IRA and I paid cash for it, so I don't have interest.
Hmm.
But I still have taxes, I still have insurance, I still have utilities, plus I have a fairly hefty association
Hmm.
fee. So I might as well have interest with
Yeah.
that association fee. So time is money, and that's one of the things. Um, Horror story wise, I mean, uh, we bought a couple of properties that we're sitting for a while, and people move on with their life for whatever reason, and sometimes they just get up and walk away
Yeah.
and leave a house full of stuff.
Hmm.
And twice that's included a refrigerator full of food
Oh. Uh huh.
that is sitting unplugged or without power for months.
Oh wow.
So you learn very early, never open the door.
Yeah.
You just wrap some duct tape
Yeah.
around it,
Yeah.
get it out of the
Get it
house
out.
as
Yeah.
easily as you can, and take it to the dump and get rid of it, because we opened the door and it was nasty.
Oh yeah. Yeah.
Yeah, it's bad.
I've seen some things. What about with tenants? I mean, have you ever had issues with tenants? A lot of people say I want to buy a rental, but I'm scared the tenants will, X, Y, Z.
I I'm knock on wood, I have not.
Yeah.
I've not had the horror story tenants. The worst was early on with the deal that was supposed to happen that didn't.
Mm-hmm.
I've never had to evict a tenant.
Oh
Now,
wow,
granted, I only have 5 rentals,
it's a
and
good
they're all
track
single
record.
family homes, and my tenants in Redford have all been there more than 10 years.
Hmm.
I've never had to evict anybody so far. Um, so I haven't really had any tenant horror stories. I haven't had anybody trash a house. I haven't had any, the worst is somebody that brought in a couple of pit bulls and didn't tell me that they were having dogs at all, period,
Hmm.
which our lease excludes animals unless they have a pet addendum.
Yeah.
Um, so we had to deal with it. Fortunately, I had a property manager for that property, and the property manager dealt with it.
Yeah.
So he got to be the bad guy. I didn't have to be.
Yeah. Do you use property managers for
I
all
do
your
for the
rentals?
IRA
Okay.
properties because the IRS has some pretty strict rules about what you can and can't do in
Hmm.
terms of self dealing when it's your IRA
Okay.
that owns the property. So I try and avoid all question of that by just using a property manager, using contractors for everything when I'm doing a flip. I don't turn a screw. I don't,
Did you notarize your own documents?
can't do that
Can't do
either. Well,
that.
you
Yeah.
can't do that ever,
Yeah.
but yeah.
All right. All right. So,
Can't list it myself, even though
oh,
I'm
oh
a
yeah.
realtor.
Right. Right.
I can't list my own properties, which
Can't
is
take a
kind of a
single
bummer.
dollar of a fee or
Right. Yeah.
anything
I mean,
like that.
and there are some gray areas. Like you can manage your own properties.
Hmm.
You obviously can't take a property management fee,
Yeah.
but the entity is unable to manage a property.
Right.
It's unable to call a tenant and collect rent,
Hmm.
so somebody has to do that.
Yeah.
Some people do that themselves. I've chosen just to make it really simple and really clean to hire property managers for that. And I've got a good property manager. There's only 2 properties in Redford that they manage for us. One we're getting ready to sell, so it'll be only one. They charge a pretty low fee, and they do, the whole thing, soup to nuts.
Yeah.
So
Was that? Did you get lucky and just hire one manager and they were perfect, or did you?
no, they're my third.
Okay. Okay.
So I did have some. Yeah, actually, no, you just reminded me of a horror story, so to speak. But no, I have had 2 other property managers before that. One was a large organization that was well publicized within one of the Detroit area RIA groups. In
Hmm.
fact, was a sponsor and all
Oh
of
yeah.
this stuff. But my experience with them was horrible.
Yeah.
Just overcharging for maintenance. Taking a commission or a fee on top for maintenance. Not getting things done, and just not getting payments, and just a lot of bad things. And then the other one, I thought I'd go cheap and try there was this company that came out that was kind of an automated.
Yeah. I've
um
seen some of those.
yeah, well, they failed.
Hmm.
It's called Castle, I think. They failed. We actually lost a couple of months worth of rent when they went out of business
Oh
because
wow.
we hadn't been paid. They were always paying 30, 60 days
Hmm.
behind, which I was okay with, which now looking back, I shouldn't have been. Um, so when they decided to go bankrupt,
Oh
they
wow.
were they were a
There
couple
goes
of
your rent.
payments behind, and
Yeah.
yeah, there's no way to really get the rent. But the horror story is less of a. I mean, it's a real estate related. I got involved in a syndication deal for an apartment complex out of Houston
Okay.
with my IRA,
Hmm.
and I put a bunch of money into this deal. You had to be an accredited investor, but they took a small handful of non-accredited investors,
Hmm.
which I was one of those.
Okay.
Which I don't know if people are familiar with that concept, but you have to have a certain experience level and a certain net worth to be an accredited
Yeah.
investor. Um, and anyway, it ended up getting foreclosed on, and they lost the property, and I lost all my money.
Oh wow. How'd
I
you hear
got I
about
got
that?
two or three payments the first year that they were taking it on. It was one of these guys that was, very vocal in the Facebook groups. He
Hmm.
had a good reputation. I asked a couple of people that I know and trust
Hmm.
if they'd ever done any business
Local
with him.
groups or national?
Detroit area. I mean, he had a national presence. Um, and I won't mention the name for,
Sure.
possible slander or
Yeah.
libel, but um, he had a national presence. He was kind of trying to be a guru of teaching people how to invest in real estate.
Mm-hmm.
And this was 2020, 2021, somewhere in that range. Um, so I felt fairly confident that, and they had done other large deals
Mm-hmm.
successfully in the past. Several other large syndication type deals, same deal structure, same
Mm-hmm.
everything. Gotten in, improved the property, added value, gotten back out. The investors made money.
Mm-hmm.
But this one, I don't know if it was. I think there's several things going on. Looking back on it, I've ran across other people that were involved in the deal and talked to them and found out that the problem was is originally at the beginning they had a good structure in place, and then he decided to like fire the manager and bring in his brother-in-law or
Mm.
somebody from the family who didn't know anything about real estate, let alone managing a $30 million
Wow. Yeah.
multi-unit complex, and basically ran the place into the ground.
Mm.
And they were making progress on getting rents up and getting improvements
Yeah.
done and all those kinds of things. And then this guy came in and just sort of ran it into the ground. And the problem with syndication deals as an investor, from my perspective, is the person that's putting the syndication deal together, they generally make the most of their money up front
Yeah.
because they make their money on the referral fee or the management
Acquisitions
fee or
fee.
the
Yeah.
acquisition fee. Yeah. And so I feel that they're less incentivized
Yep.
to make sure that it's successful in the long run than they are to get the deal done to begin with.
Mm-hmm.
So
Yeah. Do you know? It sounded like it was on the right path. Do you know what?
it
Like.
was. I mean, one of the things that happened was it was in Houston,
Mm-hmm.
and one of the things that happened was a couple of hurricanes, which then caused insurance rates to like quadruple.
Yep.
And when you're talking that large of a complex, you go from $100,000 a month to
Yeah.
$400,000 a month or whatever, or a year, whatever the number is. When it makes a significant impact.
Yeah.
And then there was another factor similar to that out of their control. Oh, interest rates.
Yeah.
That one was more in their control than they presented it because the loans that they had in place required that occupancy levels be at a certain percentage, and they were unable to achieve and maintain those because of poor management.
Mm-hmm.
If they had kept the original
Okay.
management in place, they probably would have been able to achieve and maintain those occupancy levels, and they wouldn't have gotten hit with the higher interest rate,
Yeah.
penalties, if you will, that the bank, that the lender had in place.
And then there was no repercussions for anyone that was a limited partner, right? The
As
bank took it back, and that's the end of
far
it.
as I know, yeah,
Yeah.
the bank took it back. Some of the really large players that had millions of dollars
Mm-hmm.
got burnt just as well.
Oh, is that the only syndication you've invested in?
Yeah,
Okay. Yeah.
probably
Crazy.
will be the only one I will
I
ever
was
invest
I was gonna
in.
say, well, I mean, some of it you couldn't have foreseen, and
No.
so I'm wondering if you were gonna do it again. What is there anything you can think of that would protect you more the next time?
Um, more due diligence on the front end
Mm-hmm.
about the players and probably um taking a closer look at understanding because I trusted
Yeah.
more than I should have.
Yeah.
So taking a closer look at understanding the deal structure and what are some of the risk factors that could
Yeah.
affect.
And was there COVID or anything else during that time, or was it just the hurricanes and the insurance? That was the
Because
main.
I bought in 2021, I think.
Okay.
So COVID was pretty much, less and less of a factor. I think that was originally part of their economic vacancy
Mm-hmm.
rates was people that weren't paying because of COVID, but
Yeah.
they were dealing with
Yeah.
that. That was part of the plan.
Mm-hmm.
It was all dealt with, and it was all part of the original plan. So it really wasn't a factor. The bigger factor was the interest rates and the insurance.
Yeah. And that was penalty interest. It sounds like, right? Because it.
Yeah,
Okay.
yeah.
Yeah.
My understanding, anyway.
All right. Well, so you've done a lot. What are you up to now? You talked about your journey to now. So what real estate dealings are you doing now?
I'm still doing I do a handful of flips, maybe a couple of flips a year. It's harder, as you know, it's hard to find good deals that makes sense flipping. And I kind of, one of my philosophies right now, because I'm 61, one of my philosophies is finding things that are less of a hassle.
Yeah.
So I'm not personally going to go into a municipality that has a reputation of being terrible for code compliance and
Yeah.
all these things. I don't want the pain and suffering that goes along with that.
Mm-hmm.
So I try and find things that are a little bit easier. I'm not interested in the full blown major renovation type flips. I'm more interested in the cosmetic,
Yeah.
the paint and carpet, I call
Mhm.
them. Even though there's usually a lot more than that. But the more cosmetic stuff. I'll put in a kitchen, but I'm not going to be tearing down walls and
Yeah.
restructuring floor plans, which I've done. I mean, one of my favorite flips that we did was the one that we got through the agent in Brighton, and it was on the lake. And when you walked in, it was one of those, I think it was built in the 70s. One of those, you walk in and there's, like a little hallway, if you will, with the spindles with the half wall with the
Mhm.
spindles, and then the living room, the wall, you had no view, and it's a lake house. So the only view you had of the lake was like this tiny little hallway.
Mhm.
So we took the wall down.
Mhm.
Actually, we took it down to a half wall just to open it all up because the kitchen sat behind that. So you opened it up. So once it was done, you had a big, nice, expansive view of not only the brand new renovated kitchen, but you could see the lake out the picture window and the screened-in porch, and that was one of my favorites. And we did other things to add. I think we added a bedroom and a bathroom. Um, you know, because that's one of the things I try and look at when I'm looking at a property to flip is how can I add some value?
Mhm.
And obviously, bedrooms and bathrooms in single-family homes are the biggest way to add value.
Yeah.
Because that's most affected in the appraisal.
Did you do all along the way? Were you doing the work yourself, or hiring it out, or kind of a mix?
I've always, hired things out. I'm not. I mean, I'm a little bit handy, but I'm not. The quality of my work
Yeah.
doesn't live up to my
Right.
standards, so it's better for me to find good contractors that do good quality work
It's funny.
and hire that out. So I mean, I'll do things if I have to, and I can do demos easy for me because I don't have to worry about the quality of my
Yeah.
demo
Yeah.
work. But again, I'm getting old enough where I don't want to be doing a whole lot of physical work.
Yeah.
I'd rather just hire it out, get
Okay.
it done right.
So you have some rentals. You're still looking for flips, kinda, and then you're a mobile notary, and you lend some money,
Yeah,
right?
so the two biggest things that I'm focusing on right now, well, three. One is the lending business. So that, as I mentioned, it's private money that we are lending out to investors to do fix and flip projects primarily. I mean,
Mhm.
we've done some other deals. One of my first loans that I did was an investor that owned a property, but he wanted to build his portfolio to start adding more Airbnb type
Okay.
properties. So they needed some funding to seed that project or
Mhm.
that acquisition. So we paid off the loan on that current property and gave him some additional capital, so he had capital to start growing that business. Um, but primarily, it's fix and flip focused. But
Okay.
it's those short term, 6 month type average
Yeah.
loans. Um, so that the private lending business, and then um, I'm also trying to figure out how I can grow my passive income in my retirement account.
Mhm.
So trying to restructure, get rid of the stuff that has this poor, sort of return on equity
Yeah.
position, and either because it doesn't make a lot of sense in my mind to refinance. Usually, if you own it yourself or through an LLC,
Mhm.
you got a property, you can do that BRRRR strategy, you can refinance it and pull that capital out. Well, when it's in a self-directed IRA, if you can get loans, you have
Mhm.
to get a non-recourse loan,
Yeah.
but then you open yourself up to other taxes that aren't normally there. UBIT
Okay.
is one.
Mhm.
I forget what that's, unearned business income tax, I think. When you finance a property, now you open yourself up so that income now becomes taxable, which decreases the return. So I've always avoided
Mhm.
borrowing any money in my IRA. So I'm trying to figure out how to grow that and stabilize that so that I can have a more reliable, steady of income or source of income.
Does your portal for your IRA track like what your returns are based on the rent that's coming in? I'm curious, I can log into my portal for my 401k from my previous job and it says, this quarter you earn this much.
Yeah.
Are you tracking it all on a spreadsheet then?
That's what I've done. Yes. I mean, they do quarterly statements,
Mhm.
but they don't do, I mean, I usually just look at them from an income, almost like a cash basis,
Mhm.
kind of like how much cash came in per property. And then I plug that into a
Okay.
spreadsheet and track it that way. So between the lending business, the growing my IRA, and then I'm also ramping up again my real estate license. So trying to
Oh,
help more friends and family and fellow investors with buying and selling properties as a realtor.
okay. All right, gotcha. So on the lending front, who is your typical avatar? Or if someone, the people that come and ask me, hey, do you know any private lenders? If someone wanted to flip a house, what does that look like? If they called you and said, hey, I want to flip a house, how can you help?
Generally, we require that they have at least some experience, that they've done a deal or two.
Okay.
We don't loan to individuals; we loan to entities, so
Okay.
LLCs.
So you have to have an LLC.
You have to have an LLC. You have to have some experience, or be partnered with somebody that's got some experience. So
Okay.
we've had that where somebody has not done a deal before, but they're partnered with, their uncle who's in the construction business and
Okay.
has flipped, a bunch of houses. Um, and then, halfway decent credit score. It's not a huge factor, but it goes towards showing your desire to repay your debts.
Yeah. Would your interest rate change? Like a traditional loan, if you had 800 versus a 600, you're going to get a better rate.
No,
Okay.
but we do have a couple of things that we can tweak. Kind
Okay.
of, it's more based on relationship and repeat business
Okay.
than it is on anything like credit scores.
Okay. All right.
So if we're doing, repeated deals over and over, then we can probably help a little bit, maybe with some of the upfront origination cost, or maybe even the interest rate. Kind of talk to the lender or the borrower and see what's most important for them too.
Okay.
But we do require you got to have some skin in the game. So we're not gonna, loan to somebody that's borrowing the 20% that they need for the down payment, and then, they don't have any skin in the game, because
Hmm.
the philosophy is if you don't have skin in the game, you have no, repercussion if the deal goes south.
Yeah. Now, you double check. What if someone did like a cash advance on a credit card? Would you know that if they were using that as a 10% down, or does that
Yeah.
not really matter because you're still protected at your?
When we underwrite the deal, we do look at, all of that. What is the
Okay.
source of the down payment money and all of that?
Okay.
Where did it come from?
I see a lot of, you know, call this number or go to this website and we can get you $50,000 in,
Right.
credit cards. And like, I wonder if people are using that for down payment. But
Yeah.
okay, well, yeah. I mean, I guess moving forward in the future, what's the future look like for Jay as far as investing? You said it sounds like you're just trying to ramp up your agent business and ramp up your lending business.
Yeah, I mean that's that, and like I said, securing my income stream as I am looking more and more at stopping active work
Yeah.
and being
What does
more
that mean then? Does that mean
passive.
buying another rental to put into your IRA
I'm
or?
not sure.
Okay.
Honestly, that's one of the things that I'm kind of struggling with, is what does it look like? Does it mean buying more rentals? Does it mean doing more just lending? Because the lending out of my own funds, um, especially it's one of the reasons I wanted to get into the private lending,
Hmm.
is it helps me be better at loaning out my own money,
Yeah.
and um, and be more structured and be more systematic about it. Um, and so I may do less actual purchasing of property. So like if I sell this property in Redford, I may just take that money and start loaning it out,
Hmm.
as opposed to buying another property.
Yeah.
It's a little bit of active work, but it's also, once you get a loan, especially if you do a longer term loan,
Yeah.
you know, um, it's just money that just comes in.
Yeah, and that's probably, would you say that's the most passive form of investing in real estate is just putting money into someone else's deal and having them pay you rather than buying rentals or flips or anything else?
Yeah, kind of that mailbox money
Yeah,
people call it. You just kind of just
that
put
unicorn
it
that's out
in.
there.
Yeah, yeah. I mean, as long as you can evaluate the deal and feel comfortable with, the deal, the property, and the person invest doing the investing, um, then you're going to be pretty secure.
Hmm.
And ultimately, if you underwrite it correctly and you're securing it with a solid property, that if worst case scenario they do fail to perform, well, at least you've got a property that you can come back on. The problem is you gotta. That's why you gotta have them have enough skin in the game, because you can't just look at a ratio. Because if I've got to foreclose on somebody, it's going to eat up a ton of that
Yeah,
profit. So, or potential profit. So that's obviously the nuclear scenario. That's the last thing you ever want, is to have to foreclose on somebody.
yeah. And so, how do you protect yourself against that? If someone did want to be an investor, how do you protect yourself to make sure that you're running or you're doing it with someone who has the right numbers in the first place or the right deal?
For me, it's not just taking their word. Another thing I learned from the
Yeah.
syndication deal, but not just taking their word on, let's say, the after repair value if they're
Hmm.
doing a flip. I'm going to run my own comps. I'm going to take a look at the deal myself. I'm not going to loan to somebody that I can't go drive to the property and physically put eyes on it. It might be a 2 hour drive, but
Hmm.
at least I know I can drive to it and I can take a look and I can see what the problems are and maybe help solve those problems and keep them performing, as opposed to, you know, them just floundering. But, understanding how to value a property and making sure that, what if they say it's going to be worth 250 when it's done, making sure that that makes sense.
Hmm.
At least on current numbers, you can't help what happens in the market, but understanding that a little bit too
Yeah.
is so.
Yeah. Do you have any predictions or what are you hearing as far as the future of the market moving forward? Is it still a good time to invest in real estate or?
I think it is. I think it's always a good time to buy real estate with the right deal,
Hmm.
because historically, you know, other than corrections or crashes, historically, real estate just continues to perform
Yeah.
over time, and so that's one of the reasons that I've got a significant portion of my retirement in real estate, is because it's not only is it generating income, but it's also appreciating.
Yeah.
And so between the two, we may have only seen like I said, um, an 8 or 10% return on our initial investment on that Redford property. But when I sell it and I add that in,
Yeah.
because we bought it, let's say at 70,000, and I sell it for 170,000,
Mm.
you know, add that back into the 8 years that I've owned it, or the 9 years that I've owned
Yeah.
it. It's a
That's a
pretty
huge. Yeah.
significant,
Yeah.
improvement on the return.
Cool.
So,
Well, so is there any resources or referrals through your real estate journey that have worked out well for you that you could share that might help somebody else? Help the next guy down the line.
I mean, having a source of funds when you find the deal, is important, and being able to, have somebody that you can, go to and count on to get the funding. So it's one of the things that, I'm trying to create with this, private money
Hmm.
lending, organization, is being that source for people. We're not going to be the right source for every deal,
Hmm.
but one of the things that we, really try and do is make sure that we are simple, fair, and reliable, so that if you come to me with a deal that needs to close in 2 days, we have the ability to perform on doing that. So that's the way we're going to earn more business. So as an investor, it's important to have those resources, and it's true with, some of the main, contractors that you might need too. So it's always good to have a couple of HVAC people in your pocket, a couple of electricians, plumbers seem to be the hardest to find. Good, reliable, and reasonably priced plumbers, and maybe a good handyman or two that does good work that can do a lot of different things. So you don't have to go out and maybe hire a plumber all the time. You can install a sink and run the connections, and it's all going to be good and to code. And
If someone did want to flip and talk to you about that, is it better that they find a house and then call you, or should they call you first and then find a deal?
It's easier to talk about a specific deal.
Okay.
And I'm always happy. I was just on the phone this morning. Time all blends together. I think it was this morning with an investor from the investor group, and she was asking me about a specific deal, and she's talking about the numbers, and sometimes it's really easy to outside looking in to look at a opportunity and say, no, that's not a deal.
Yeah.
Whereas when you're inside looking out, it feels like one of the mistakes, especially newer investors want to make, and I've done it myself, is, it's like, oh, geez, how can I make this work?
Yeah.
As opposed to, should I make this work?
Yeah.
It's like, then they start talking themselves into it. Well, if I do this,
Yeah.
or if I do that, or if we can get, 20 grand more on the sale when the market doesn't support that, or the rents don't support, if I can get $2,400 a month, well, market says you can only get $1,800 a month. Yeah, maybe there's a way to get $2,400 a month, but through short term and midterm or some of these, higher return kind of rental strategies.
Yeah.
But I've gotten a lot more conservative. And so if I'm going to look at a property to rent, even if I want to do it as a midterm rental, because I do have one of my rental properties that I run for midterm, short-term rentals. And I'm not going to base my financial analysis on the midterm, short-term numbers. I'm going to base it on what would it be if I had to rent this out on a 12-month lease, a long-term rental basis. That's what I'm going to build my model on, and then everything above that is gravy.
Yeah. No, that's good advice.
Yeah.
I just heard that on another podcast that if it makes sense as a long term, it'll make sense as a midterm and short term.
Exactly. But the opposite is never going to be true.
Yeah. Yeah.
And too many people are building portfolios based on the short term money. You know? And you're one city council resolution away from losing your short term rental business if you're basing it entirely on that. So
Well, cool. I appreciate you coming and chatting. Is there, do you mind sharing a way to contact you? Phone number, email, website?
Easiest way to get a hold of me is my phone number.
Okay. Yeah. If you want to just share it.
Call or text. It's 248-915-9797.
Okay.
248-915-9797. I'll just repeat it.
Yeah. Call and text if you want.
Yeah. And then we can connect other ways. I'm also, I'm on Facebook. I will usually, if somebody hits me up on Facebook, even if we're not friends, I have this philosophy is I don't have to be Facebook friends with everybody, but I'll communicate via Messenger, that we can use that to get connected, but don't just send me a friend request because I'm probably not going to accept it.
Yeah.
But send me a message request. Tell me what you want to connect about, and I'm going to accept that, and we can connect.
All right. Yeah. And Jay, comes to most of the Achieve meetups too. So if they want to meet him in person, he'll be here. So.
I do. And I'm also on the board of the Rental Property Owners Association of Mid-Michigan, which is landlord focused. That group meets once a month, so I'm at those meetings as well. I'm starting to get more plugged into some of the developers community. So I'm starting to go to some of those meetings. And so trying to get more plugged into the real estate, not just the market, but the community in Lansing.
Yeah, a lot of opportunities come from networking. So that's how we met. So
Exactly. Yep. Exactly.
It's okay. All right. Well, thanks again, and thanks for listening, everybody.